balanced with momentum always being favorable with credible developers. Obviously, what we witness and personally see is in the luxury housing, primarily in Mumbai per se, is performing really well. But the mid-income and the premium segment is also strengthened. That is what we have been seeing. Supported by this all has been possible because of the the cumulative impact of the lower interest rates. The industry's ongoing consolidation reflects a more strategic approach. Developers are aligning new launches with market demand to safeguard margins. With approval processes and regulatory bottlenecks easing out, project execution timelines are also improving, reinforcing overall market stability. Investment activity also remains robust, and with the increased capital deployment in office space and retail assets alongside continued traction in the land and development side acquisitions. So we are also seeing a good demand coming in not only in the residential segment but also in the commercial and the retail assets as well. The ongoing festive season, along with the support of the government for the reduction in GST in many sectors, has seen a good amount of liquidity following in the market, which has helped overall having a positive impact during the festive season. And the RBI's monetary of easing earlier this year was also expected to significantly boost demand in the affordable and the mid segment. So overall, the sentiments are looking positive, and customers are coming in a right way for the right launches. Coming to our performances as Ajmera Realty, I'm very happy and proud to say that this has been our highest ever quarterly bookings and has been having a great collection as well. In the late September, that is just a few weeks before the month was ending, we had two landmark launches. One is Ajmera Manhattan 2 and at Wadala, and one is 3315 in Bandra, which was a commercial project. Both of these combined GDV is about 2,100 plus crores, and very happy that these launches have been successfully done. The market has responded great, and this has resulted in our highest ever quarterly bookings and showing it at 828 crores of advance sales, thereby showcasing over 50% of our full year's guidance coming in just these 2 quarters. So, the overall performance by the market, from the people, and also by the team has worked well to have two great launches coming in the last in September itself. Ajmera Manhattan has witnessed exceptional traction. We've done about 38% of our inventory is already sold in less than a month of the launch. This clearly shows that community living, openness, and when you give a great product with absolute, has a perfect demand, and it also gives a great stage for accelerated development for the remaining Wadala land parcel. Because we have witnessed that if 38% of our inventory from the launch is being sold just within a month or less than a month, then definitely our launches for the future parcels also come in at an accelerated pace. Our commercial launch of 3315 in Bandra has also done good traction. We've sold about 5 to 6% of our inventory, and this was done just at the last week or the last few days of September. So overall, both these projects have been doing extremely well. Amongst our ongoing projects, the Ajmera Manhattan Phase 1, that's the first tower, has achieved 89% of its sales. The construction is progressing well. We are almost about 80 to 90% of progress in terms of construction done. The next phase, that is Ajmera Greenfinity, has recorded 74% sales, and even the construction of that is, the structural work is almost completed, and we are now gearing up for finishing. Ajmera Eden has completed its structure and achieved 98% sales. Ajmera Vihara Bhandup has achieved 81% sales, and it's on the 9th floor for the rehab slab, and we are on the plinth of the sale building. In Bangalore, our mid-market housing portfolio also is continuing to have strong momentum. Lugano and Florenza are nearly sold out with 97% of its inventory being sold. and we have received OC in 2025, September 2025 for these two buildings. Ajmera Iris has launched recently and has seen about 70% sales, while Ajmera Marina, which was launched in Q4 of FY25, has seen robust demand in 68% sales, and foundation work is in progress. Sorry, it's Q2 of FY25. So while all of this, it has been on track, and we see a great momentum in terms of work and in terms of sales in our launch projects and in our existing projects as well. We are extremely on track, and we remain to see our estimated GDV of 6,400 crores in FY26 of the launch pipeline, what we are going to do, and out of which two projects have already been launched of 2,100 crores. So looking ahead, our upcoming 7 projects with a combined GDV of 4,300 crores across 1.6 million square feet of carpet area, we are very confident that this will have a great run both in terms of booking and construction. On delivery side, we are gearing up to have almost about 1,000 possessions to be done in this financial year, out of which 533 homes have been already given, and I'm very happy to say that we have delivered 533 homes in the first half of FY26, and we will continue to give the other balance in the next 6 months. This is also being supported by accelerated progress in all our projects, be it Mumbai or Bangalore, reinforcing our focus on timely delivery and sustained value creation for all stakeholders. With that, I just want to say that the company is gearing up for an aggressive, launches and aggressive construction for the existing projects. We have about 9 projects which are undergoing and about 6 to 7 launches coming in. Overall, 15 to 16 projects with a total GDV looking in and around 8,000 crores is what the company is looking to deliver, construct and sell in the next 3 to 4 years' time. I would like to hand over the call to our CFO, Mr. Nitin Bhavesi, who will take you through the financial and operational highlights. Thank you.
Very good evening to you, everyone, and thank you for joining us. Before we move on to Q&A session, allow me to summarize the consistent operational and financial performance what we have delivered for Q2 and H1 financial year 26. Coming to the operational performance, company has achieved its highest ever quarterly sales, with sales value tripling YOY basis, which is to 720 crore, which is sales adding up to 828 crore, which is 48% YOY growth. In H1 26 sales volume terms, it is 293,000 square feet carpet area sold, which is also a 20% YOY growth, and collection also with a 52% growth at a 454 crore. Coming to the financial performance, revenue at 481 crore during the first half of FY26, which is 20% growth YOY, supported by very consistent execution across the projects. EBITDA at 6% growth, which is at 139 crore, and PAT at 71 crore with a growth of 2% on a YOY comparison. The company maintained a strong financial position with total debt of 690 crore as on the quarter end September 30th, 2025, with a healthy debt equity ratio of 0.55x is to the net worth, well positioned to deliver for its strong growth pipeline. Moreover, 24 basis point reduction in the weighted average cost of debt to 11.51% highlights our enhanced credit profile and disciplined financial management. Our revenue visibility has strengthened significantly, driven by, of course, the exceptional sales what we witnessed during these launches, couple of launches, and steady progress across our ongoing and OC received projects. The total visibility from this stands at about 3,599 crore, comprising 1,582 crore from the committed sales and about 2,000 plus crores from the available inventory to sell and revenue to recognize upon the life cycle. Additionally, our upcoming launch pipeline is also expected to contribute 4,357 crore, which is the GDV of the balance 7 projects, and that's why the overall revenue visibility is at a robust number of sub 8,000 crores with a strong growth momentum ahead. In terms of the cash flow, the net cash flow pre-tax post-debt from OC received and as well the ongoing projects is estimated to generate about 1,526 crores. With this concise summary of our business highlights and financial performance, I now invite your questions and look forward to further interaction. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from the line of Dhaval Jain from Sequent Investments. Please go ahead. Dhaval, your line is unmuted.
Hello.
Please go ahead with your question.
Yeah, sir. So just one question on my side. I went through our annual report, and it says that we have an investment in Bahrain and UK. So wanted to understand if there's any outcome of this investments that we have made in these countries.
So yes, we have started receiving, and it has been while that we started receiving the repatriation from UK, and the mix of the funding structure of loan and as well the equity investment is coming down sequentially. And on a Bahrain project, we exited and we received the down payment, and we do have the inventory entitlement there. And upon the advanced stage of the completion of this project, we expect this inventory to get monetized, and then after the repatriation of the Bahrain also is expected in in about couple of quarters from here on, kind of.
Okay, sir. Thank you so much.
Thank you. We'll take our next question from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thank you. Thanks for the opportunity. First of all, congratulations for successful launch of Wadala and Bandra project. So since both of the projects were launched at the fag end of the Q2, if you can just highlight how is the momentum in the October as well, if you can guide.
So as we said that, Manhattan, we had launched just a few days or just at the fag end, but obviously about a week prior to the quarter ending, and we've had a tremendous response, and we got really good numbers coming in. We have now moved into the sustenance phase in Manhattan, and we are looking at that sustenance sales continuing over the next few quarters, because the launch pipeline will come in, the sales pipeline will continue there. The Bandra one is continuing to see the momentum, and we are looking at good numbers coming in from that region. But yes, of course, as we said, this is commercial sales, so that will have its timeline going in. But overall, both the projects are looking at a positive end, and it is not that we're going to get on a pause mode, but sustenance sales will continue.
Okay. Now, my second question is regarding the pipeline of the project. So, if you can just broadly update on, let's say, Vikhroli and Versova, which we are planning in this quarter, where are we in terms of regulatory approval? And obviously, for the fourth quarter, in terms of the Kanjurmarg, so have we applied for the EC? Because many of the competitors have already started, having the hearings in the EC. So if you can update on our project as well.
So Vikhroli, I'll give you project-wise. First is Vikhroli. Vikhroli, we are in advanced stage of getting approvals. Hopefully, in the next few days, I would say, or next few weeks, we should be able to complete all the approvals in place, and we should be able to start launching the project. Warsaw, we are also on track to get the approvals, but obviously because it's a society redevelopment, the approvals come in phases. After you get one principal approval, then you break the society, and then you get the CC, and then you get the RERA. So that's the process which we are following. We've got that nick of approval. Hopefully the breakdown of the building should start in the next 20 odd days time, by this month end or probably in this month, and then we should be able to get the CC and RERA as soon as possible.
Okay, and in terms of Kanjurmarg?
Kanjurmarg, we are in the process of getting approvals for different approvals from the collector and other requisite permissions which are required. That is going on because it's an ongoing process, and every time there are some challenges coming in for the approvals related to, because different departments are getting involved in terms of collector, in terms of BMC, in terms of environment. So we need to mitigate all of this, and we are working on this. But we are very confident that we will have the basic approvals coming in place very soon.
Okay, and we have applied for the EC, or it is maybe sooner we will apply?
No, we are yet to apply, but we are all ready. We've already started getting EC. ECs are now coming in regular time. Before EC, we have to apply for the fire NOCs and all of that, which we have got, and I think now in this month we should be applying for EC.
Okay, and in terms of timeline, where are we standing for that, which we are planning, like from leasehold to freehold of the property?
Well, that is related to government, where we've already applied and working on it. There's no fixed timeline to it, but we are working towards getting that approval coming in.
Okay, and last question from my side. Since we are having a BMC election next month, so do you foresee any delay in the approval process because of that?
Yeah, 100%. There will be. That is where we are pushing to get all our approvals, whatever for the project launches which we need to do, in place, because once these BMC elections are announced and people will start getting busy, there will be delays coming in over there. But we are, for all our launches, what we have planned, I think we should be through. That shouldn't be too much of a challenge.
Okay, fine. I'll join back in the queue. Thank you.
Thank you. We'll take our next question from the line of Manas Agrawal from Sanford C. Bernstein. Please go ahead.
Hi, couple of questions. From a completion perspective or revenue recognition, Manhattan 1, when do we expect the milestones to be hit in terms of completion? That is A. Second, I was looking at MMRDA announcements. They've started to auction plots close to your plot for Wadala CBD. So wanted to understand how rates are panning out. I think there is some discussion for you guys for a commercial also in the area in the future. So those are the two questions.
So first part of your question regarding the revenue recognition, it is on the 25% threshold of completion on the cost basis versus the overall budget for the entire project. So that is the benchmark and the threshold. Once we cross that, then after the revenue eligibility starts, and of course there are other conditionalities of the critical permissions for the construction to begin for the project is been availed, and there are within the project recognition the sales whatever achieved, the 10% of the collection also been achieved, and those are the criterias and the eligibility for the revenue recognition, and that's why how the the erstwhile guidance note and as well the percentage of completion method what we are following under the Ind AS as well. Coming to the MMRDA part, so very happy that when we look today at the way the MMRDA has taken out the auction, and if you look at the reserve price which they have put in, right, they are merely looking at least
I believe 10 to 15,000 rupees a square feet minimum on the land, plus there will be construction cost, plus there will be a premium cost, and thereby the end product, what we see this coming out to be not below 50,000 rupees minimum. So otherwise I don't think it becomes too viable for a developer. However, we need to get into the details, and we ourselves are looking out to get some tenders in that to understand what the nitty-gritties are. But overall, for us as a project, if we just put this as a benchmark, we are looking at the FSI cost of minimum 10 to 15,000 rupees a square feet.
Understood. I think your first question that you answered was for Manhattan 2. My question was for Manhattan 1. Like, when do we expect completion?
Manhattan 1 as a project, we should be able to complete, our target is by next year, December. But in RERA timelines, obviously they are higher, but our target is between December 26 to March 27 is what we are looking at completing it.
Understood. Thank you.
Thank you. We'll take our next question from the line of Saurabh Sadhwani from Sahasrar Capital. Please go ahead.
Hi, good afternoon. Thank you for the opportunity and congratulations on the 2 launches. I just wanted to know your thoughts on the 2 metrics, the sales volume and the realization. These both have contributed fairly equally to the growth for the first half of this year. How do you see these metrics going forward, and what do you bank on for your growth in your sales value?
So, as far as the sales volume is concerned, as you know that we've got this great traction coming in from the launches, and we are very confident with the kind of list what we have for our launches coming in the next half of the financial year. This momentum will continue, and it will also be supported by our existing projects which are ongoing and sustaining sales coming in from that. As far as realization is concerned, I think we are looking at, if you see the first half of last year, we were at about 22,800 rupees a square feet. This time we are at 28,000 rupees a square feet, and this is primarily because it depends on the project to project and what is the value of the project or the price of the project what we are selling in. This time Manhattan was the hero, so obviously the pricing was 32,000 rupees a square feet. Next quarter we are looking at Vikhroli being the hero, where we will see a larger number of volume coming in sales. Obviously the sales price will be a little lower, but that is completely variable in terms of volume and velocity of sales. So overall we will continue to grow with this momentum and continue with our sales trajectory coming from all projects what we have envisaged, and I think the realization will be varying quarter to quarter based on the launches.
Okay. And what would be your progress on project additions this year?
So for project additions, we are working on 3 to 4 projects where our active work is going on. We are trying to have some regulatory clearances coming in at the basic ones. Once that is there, then we can sign up on a dotted line and take those projects in our books. So hopefully we are looking at about 3,000 plus crores of revenue targets coming from 2-3 land parcels what we are talking to.
Okay. Thank you so much.
Thank you. Next question is from the line of Vijay Raj Solanki, an individual investor. Please go ahead.
Hello, there is on the rent of
Can you use your handset mode, please? Your voice is not clear.
Now my voice is clear?
Yes. Please go ahead.
Jai Swaminarayan Bhai. I just good to know that from our Vadala project, Manhattan project, from 1.5 kilometer distance, there is a project of Lodha, and they are giving 70% open area, and we are giving 50% of the open area. So, is there any challenges we are facing to sell our Vadala project, Manhattan?
I think there is some mistake in some terms of numbers. I'm not too sure about what the open spaces in Lodha are, but definitely for us it is above 50%. So if I purely look at the, openness, what we are, if I just give you one example of Manhattan, where we have currently launched, we have a podium of 7 acres, which is completely open and car-free, what we are launching, and we are going to have only 4 buildings coming in over there. So technically, it's not 50%, but it will be in the range of about 80% or something. I don't know the exact numbers, but it will be around 80% openness coming in over there. So because of 7 acres of podium with complete openness, having 4 buildings standing on it. So I don't think it's 50%, it will be even higher. That's what I'm trying to say.
Okay, sir. Thank you.
Thank you. We'll take our next question from the line of Abhi Shah, an individual investor. Please go ahead.
Hello. Am I audible?
Yes,
Yeah.
Please go ahead.
Yeah, so one of my question, I have only one question. So it's regarding the 3 projects, Manhattan 1, Greenfinity AB and Vihara. The sales figure shows the same amount compared to previous quarter and the current quarter. So can you just throw some light, like why is that reason?
So Greenfinity, Manhattan and Vihara, all 3 projects, if you go to see, Manhattan has sold about 90% of its velocity, or like the total sales 90% have happened. Greenfinity, we are at about 74-75%, and Vihara also we are at about 70% sales. Typically what happens is that when you have reached that kind of a level, the choice of flats become a little challenging for a customer to buy, and that is where you will see some sort of lower sales coming in, because there is less number of flats available, and people want to have a particular choice of flats coming in. So that's where you will see some kind of numbers panning out to be almost same, or maybe some customers who have probably not been paying, and we want to cancel their flats and then rebook it with a new one. So our system is that we do not, we do a net booking. So even if someone's cancelled it, we cancel the number of flat and then probably add it right now only, rather than doing at the end of the project. So these are the 2 possibilities, and that's how, we've just been doing it over here.
So can you just say, like, when will you able to sell the remaining quantity of flats remaining?
So Manhattan, we've left with about very few flats, about 40-50 odd flats which are there. I think by next 6-8 months we should be through, and for Greenfinity also around the same time, and Vihara we will probably a year or so is what we are looking at.
Okay, thank you.
Thank you. Next question is from the line of Dr. Taruna Maheshwari from Prosperian Consulting. Please go ahead.
Good afternoon, Mr. Baheti. This is with reference to overseas investment in Bahrain as well as in London. We would like to understand, first of all, we would like to request you to put it a part of a presentation so that we can understand and we can track the cash flow. Second, in particular, I would like to understand that how far money we have received from Bahrain and in which area we will get it in particular.
So Bahrain, we have received about 35 odd crores, and that too when we exited the project in few years before in FY22, and balance of the inventory entitlement of 10,000 plus square meters, and it is ongoing and advanced stage of the completion of the project, and we are expecting to monetize this inventory because we don't intend to hold on the inventory in that particular geography, and that was the moot reason when we exited the project. And yes, we will be receiving the repatriation, and it will be appropriated against the loan and as well the equity funding which is standing into the balance sheet. On the UK side, we have the similar structure of the funding, and we have been receiving the funds and we have been appropriating in the balance sheet on the loans and as well on the equity side.
We would also like you to request you to present it in the presentation as a cash flow item to make the tracking clear for the investor.
It is part of the cash flow item, which is in the piece of 330 crore expected cash flow from the other revenues, which are the part of this one, and 2 assets which we intend to monetize. So it is very much part of the cash flow estimation within the 2,800 plus crores of the cash flow overall what we have estimated. We have disclosed that one as well.
Oh.
Thank you. We'll take our next question from the line of Nilesh Sharma from Anantnath Skycon Private Limited. Please go ahead.
Hello.
Yeah.
Yes, we can hear you. Please go ahead.
Congratulations.
Thank you.
I'm sorry, sir. His line is disconnected. I'll move to the next question from the line of Karan Batelia from MAIQ Capital. Please go ahead.
Good evening, sir. Congratulations for such a great set of results.
Thank you.
Sir, just going to one thing, what is the reason for the drop in the EBITDA margin for this quarter, if you could explain?
So basically, sir, it is because of the composition of the project which are participating into the top line revenue recognition. And as you know that we are recognizing the revenue on the percentage of completion and on the sustenance sales of the ongoing projects what we have been. And most of the projects are being that of the Bangalore and as well the low margin, relatively low margin projects, that of the Vihara and such other projects. So that's how the, relatively, couple of basis points drop into the EBITDA one.
Got it, sir. And the second question, it's a very generic question I wanted to understand. I understand we have a very, a robust land parcel amongst ourselves, but since Bombay has so many redevelopments going on, so what are your views and what, as a company, are you looking for taking over such projects for redevelopment?
Yeah, of course, 100%. If you go to see, our entire business model is based on 3-4 buckets. One is our greenfield projects, which is where we have our own land banks, where we are, taking approvals, doing the planning and selling. Second is a joint venture and a joint development projects, which primarily we are doing a lot in Bangalore. The third one is an outright basis. If we get a greater opportunity like the Vikhroli one, the Ghatkopar one, the Eden project which we launched, all those are outright bought projects. And the fourth one is redevelopment of slum, society, MADA, etc. So all these 4 buckets is what our business model is based on, and it's not something that we concentrate on one or the other, but we have dedicated team to ensure that all these projects have been working independently to take it forward. So we are absolutely on track to, in fact, while we speak today, we are at least bidding for minimum 30 to 40 societies, or probably given our offers or discussions, or probably just evaluating. So that's how we are working on.
That's amazing, sir. Good to hear, and all the best. That's all.
Thank you. We'll take our next question from the line of Raj from Arjao Partners. Please go ahead.
Hello, am I audible?
Yes, please go ahead.
I wanted to understand slide number 31, where you have given projections for the cash flow. So the estimated cash flow from the ongoing project is 1526 crores, right? And from the upcoming project is 2872 crores. Hello?
Yes, the ongoing project has the 1526, and the upcoming project, which are the pipeline of the project, 7 projects with a GDV of about 4,300, having the cash flow estimation of about 1,000 crores, and 330 crore is the cash flow expected out of the asset monetization and repatriation, and that's how the 3 combination is giving the overall cumulative cash flow of about 2,800 plus crores.
I said the 2,872 is the addition of all these 3 figures, right? 1526, 1060, and 330.
Yes, sir.
And sir, in how much time are these cash flows will be come into the books?
So 1,526 crore is on the ongoing project, which is having the timelines of completion from about 2 to 3 quarters, ranging up to the 4 years kind of a thing, because project which we just launched and it is going to be completed and cash flow will be unlocked. And in terms of the projects to launch and having the cash flow unlocking, which is 1,016 crore, which will have about 4.5 to 5 years. So all in all, overall, it is 4.5 to 5 years.
Overall, 4 to 5 years it will come into the books, right? It will be realized.
Yes, but it is a regular and gradual, because the low-hanging fruits, the projects like, the already completed like Privy, Eden, Nucleus, inventory available, and, projects which are at nearly completion kind of a thing, and those ones will start unlocking the cash flow from the, couple of quarters onwards.
All right. Okay. All right. Okay. Thank you. All the best. Yeah.
Thank you. We have a question from the line of Nilesh Sharma from Anantnag Skycon. Please go ahead.
Hello, sir. From slide number 21, how much revenue we are going to book in next 2 quarters out of 3,508, which is ongoing project, and 91 crore in which we have received OC?
So, as we have given the guidance, 91 crore, which is the completed and OC received, in next about couple of quarters we should be, and we, as we speak, we have the inventory sale post quarter, and which is going to definitely come into the income statement. And in terms of the revenue for 3,500 from the ongoing project, significant one, that of the pre-sales what we have clocked in the last quarter, and that is going to be, once the project becomes eligible, which we envisage from the couple of quarters from here on, and then after the revenues will start coming into the income statement. And as I explained, 4,300 crore of the launches, those ones in the span of about 4.5 to 5 years.
Yes, sir, I totally agree with you. But to be very precise, we want to just know about the where we are going to close this financial year. How much will it be? Yes, this financial year.
So this financial year, definitely last one which we closed, which is 750 crore top line, and there would be a significant growth over the last year number.
Okay. Thank you, sir. Thank you. And what about margins? It will be...
Margin definitely, as I explained, relatively the low margin projects being participating into the revenue. That's how the EBITDA and the PAT margin being stable. But going forward, because we have such a healthy high margin pre-sales already booked, like in Manhattan and other projects kind of a thing, there would be a margin upwards traction in terms of the coming quarters.
Okay. And then what is the specific reason of decline in the margin in September quarter?
So that is because of the, the relatively the composition of the projects which are participating in the revenue, which are, as I explained, the Vihara, the Eden, and the ongoing sustained sales kind of a thing. And those ones are the reasons for this, couple of basis points of the lower margin.
So we usually, if we look at it, our land original, like our greenfield projects where our land banks are, being taken at an historical rate, the margins over there are a little higher. When we look at a redevelopment or a slum redevelopment project, the margins are comparatively a little lower than what our greenfield projects are. So, but while we continue to do both these projects, what we see is sometimes when a redevelopment or a slum redevelopment project comes into an income statement, that time we probably might see a dip. But if now, let's say in the next few quarters when Manhattan comes into the income statement, the margins will rise again. So that's how variability comes into place.
Okay. And sir, the potential launches of around 4,000 crores, there is any land acquisition, any progress which we can notice?
So as in the slides, what we've given as the launches, Vikhroli, as we said, we're going to launch pretty soon. Warsaw also will be launched. Bangalore is getting launched. Boutique office at Badala is getting launched. Kanjurmarg, we are under process of getting approvals, and Shastrinagar and Ghatkopar are also on track to see the kind of designing and planning happening. So that will also come into launches as desired.
Okay. Thank you, sir. Thank you so much.
Thank you. Next question is from the line of Saurav Sadhwani from Sahasrar Capital. Please go ahead.
Hello again. On the approvals on consumer, do you expect them to get those before the BMC election is announced?
Sorry, which one?
Consumer.
No. It will not happen that soon because there is a process of approvals which needs to be taken first and then apply in BMC. So I don't think it will happen prior to the BMC election. It will happen post BMC election.
Okay. And on the new plots being auctioned in Wadala, I just want to clarify that you said that the realization would go up to 50,000 per square feet.
Yes.
Okay. That's
because today, if you see the minimum set price which has been put in, is roughly about 10,000 rupees a square feet on the FSI area. Now, if I have to add the premiums, the cost of construction and other things, I think overall what we are seeing is that I don't think anyone is going to be able to sell below 45-50.
Okay, and this would also then improve the realization on your existing plots, right, around that area?
Yeah, absolutely.
Okay, and on the sales value guidance, we have been on track for the first half, and the projects have also been launched, so we do expect to achieve that guidance, right, this year?
Yes, 100%.
Okay, thank you so much.
Thank you. We'll take our next question from the line of Abhi Shah, an individual investor. Please go ahead.
Yeah, thanks again for taking my question. So I have one question. So you, as you said, you are planning to build a 7-acre podium in Manhattan, which has 4 buildings. So can you just provide me the apportion podium cost in all projects or one project? Can you just provide me the details?
It's very variable, sir. I think if you can come down, we can explain to you in detail about the entire costing, because podium is just not inclusive about structure and cement, but it is also has a lot of amenities in terms of mechanical engineering and waterproofing and interiors and parking. So it's not a portion, but if I have to give you a rough thumb number, it will be anywhere between 2,500-3,000 rupees a square feet on the construction area.
So it's about one project or all the 4 projects?
No, it's on construction area per square feet. So that's that, because the construction of that is also equivalent or almost equal to the construction of the building which I'm going to sell. So just to give an example, if I'm selling 1 square feet of carpet area, I'm actually constructing 2.1 or 2.2 square feet of the total building construction area, which includes podium, entrance lobby, services, the building itself, everything. So that's the perspective which I'm giving.
Okay, so you will allocate the cost in all 4 projects?
Yeah, of course, it will be allocated in all 4 projects.
Okay, yeah. Thanks.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference over to management for closing comments. Over to you.
Thank you, everybody, for participating in this earnings call and for your interaction through questions and, helping us to get the more insight out of your questions. Till we connect next time, stay safe. Thank you, everybody.
Thank you. Have a good day.
Thank you, sir. On behalf of Ajmera Realty and Infra India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.